new listing on the bourses today, that is Nexus Select. That is one of the leading REITs in India, and one of the REITs in India, that even the first REIT in India with a rent yielding retail assets, is a home to India's largest mall platform. Mall platform includes 17 top quality assets. So let's connect with the management of the company and try and understand the outlook. We have Asheesh Mohta, who is the Senior Managing Director at Blackstone. Hi, very good morning, Asheesh, and thank you so much for joining us today on ET Now. Firstly, you're raising 1,400 crores as the fresh issue. So what are the plans to increase the assets that you have with this money, and will you have to take some more debt to fund your asset expansion plans?
Firstly, thanks for having me, on ET. Look, we are, as you said, 17 malls across the country. And our ambition is really to grow this platform. We are very high conviction believers on the Indian consumption story. And therefore, we will look to aggressively sort of build this out. What do we think we can sort of grow this to? I do think we can double this portfolio in the next 3 to 5 years. How do we sort of fund this? I think the REIT's a great vehicle for these acquisitions. It allows investors to efficiently swap in for units. It allows us to pay for cash. And just given our balance sheet today, we are only about 17% levered. It really gives you a lot of headway to take debt. What we really want to do in terms of these acquisitions is look at the highest pockets of consumption to acquire these assets. So these would be the large metro cities, some of the large mini metros, where we are seeing large pockets of consumption. And in terms of acquisition strategy, really try and see if we can acquire these at NAV and DPU accretive values. That's really been the strength. The other unique thing for us has been Nexus, a dedicated platform that we built, to manage all of these assets. It really sets us apart from, single standalone mall owners in terms of our ability to sort of leverage scale, leverage relationships, and that's really what we want to do as we build this out.
Right. A very good morning to you, Mr. Mohta. This is Sharla joining in the conversation, and congratulations for your listing on the bourses. If you talk about the pre-COVID levels, the company was growing at about 10 to 12%, whereas post-COVID, the sales growth has been actually 30%. But that could be due to pent-up demand, isn't it? Or is this growth number of 30% is likely to sustain going ahead? What sort of a guidance can you offer when it comes to this particular domain?
Yeah, no, I don't think the company will sustain 30% growth. But can it achieve what it's achieved in the past between 11 and 12%? I think that's very highly achievable, just given the lease structures that we have, where we not only have base protection on rents, but also participate in sales, as they keep increasing. So 30% obviously is a function of some pent-up demand, inflation, in prices sort of catching up. But the way we've sort of thought about this conservatively is, in our projections, only thought about the sales growth being like 8.5%. I think we can significantly overachieve, on that number, and it can easily be early double digits as we've seen in the past.
Okay, Asheesh, now let's talk about your yields, because just wanting to know that what is the yield that you generate on your assets that you hold? Since it's retail, it would be 1% or 2% higher than the office and the commercial leases?
It's about, where we're currently sort of listing is at about an 8.25% yield. Compared to the office REITs that are prevailing in the market today, they probably broadly trade in around the 7 zip code, today. So, a pretty healthy spread in terms of the yield that we are offering. Also, if you compare this to any other fixed income product today, on a post-tax basis, very, very advantageous for most investors. The 8.25% essentially translates to like a 7.1% post-tax. If you compare that to even FDs or any corporate bonds, you essentially have tax at the marginal tax rate for most investors. So really on a post-tax basis, very, very efficient and a very good yielding product for most of our investors.
Lastly, Mr. Mohta, Nexus portfolio includes 17 malls in 14 cities. If you could tell us what are the plans for expansion? Are you planning on adding some more malls going forward?
Definitely. As we speak, we are in advanced conversations with many mall owners. The Indian mall industry, just to give you a quick couple of minutes, is pretty fragmented. Other than Phoenix, us, a couple more large owners, it's really owned between ones and two with large developers who, for many of them, this is non-core. That's really how we've sort of built this portfolio, and that's what we want to try and focus on, is to keep acquiring assets from some of these large developers, funds, and or just single asset owners. I think the REIT, just to add, also gives you a very efficient structure compared to a normal company to just swap in for units, which is very tax efficient for the seller. So all in all, like I mentioned before, we really want to try and scale this up very, very quickly.
All right, then we leave it there, and all the best for the future, Mr. Mohta. Thank you so much for joining us, and all the best for your journey on the bourses as well. And that was Mr. Asheesh Mohta, who is the Senior Managing Director at Blackstone, joining us. Remember, the Nexus Select Trust has listed on the bourses today, and it listed with a 3% premium. Right now, the stock is trading higher by about 4%.